Greetings, traders. Hope you can hear me all right. It is just a minute or 2 minutes after August 1st, Tuesday, here Central Time. Hope you're all doing all right. How's it going, Nick? Nice to see ya. Nice to see ya. Yo. Nice to see you as well. Been a long time, right, since we chatted? I'm going to be doing a little lesson today on keeping a close eye on fundamentals. We did this presentation last year, at least part of it. I'm going to change it up a little bit, make it a little more interactive with all of you. And we'll see how it all pans out. I think it's going to be some good information. Like I say for most of the lessons, good information for people who are new, good information for people who haven't touched on this subject for a while, and even some of you have been doing it a long time. You know, there's always a few nuggets you can pull out of any lesson, whether it's from me or Andrew or Tony or Nick or whoever it might be. So you can just sit back, relax, take some notes if you like. Some of this stuff might be review for you, might be a little newer for some of you, and we'll see what we can do. So got this beautiful slide here for you. I don't know where this came from, but fundamental analysis. All right. Before I get started, I have a little disclaimer. I'm not strictly a fundamental trader. I trade mostly technical, like I think a lot of you do. But I always keep aware of the news events and the fundamentals at all times. I'm not a total guru when it comes to fundamental analysis, but I've taken some courses on it over the years. I've read many books on the subject, and I look at it every single day. So I've been doing this for well over 10 years, over 11 years probably now. And it's just really helped me a lot over the years to be more comfortable with fundamental analysis. Sometimes fundamental analysis can be a little bit scary for traders because there's so much information out there. I mean, we're talking about the whole world. You know, the currencies of the Canadian dollar or the euro or the pound or the US dollar. And there's just so many little intricacies to look at, like the stock markets and the interest rates and things. So I'm going to go over that a little bit with you here. I'm not going to get super in depth, but we're going to have a little discussion if you like at the end, and we can chat a little bit more, make it sort of interactive a little bit. How's it going, Amrit? GPF Westy, Kitschy, howdy. Yuri, nice to see you. Doctor, nice to see you as well. Barnacle, welcome aboard. Let's get right down to business here. Got the little shiny money bag in the bottom right. So what is fundamental trading? Here's the basics. Central banks, fiscal and monetary policy. So I'm going to keep this quick. I don't want you to be bored with this topic. This is the stuff as far as trading is concerned that isn't usually the most exciting. But when you talk to expert traders, this is the stuff they talk about because it's the stuff that can make the biggest change in the marketplace. So fiscal means direction that the government works regarding taxation, spending, and borrowing. And monetary is the actions they take to achieve the fiscal policy. So I'll leave this up here for a little bit. You can take a look at it a little bit more if you want. But interest rates are what determine the value of a currency. So the ultimate news for any Forex fundamental analysis, or even when you're watching your technicals, the ultimate news, the ultimate sort of whipsaws you see on the chart are usually due to interest rate announcements. When you boil it down and we get out of our sort of, you know how they say, can't see the trees in the forest, can't see the forest for the trees, that type of saying. It's sort of like that. When you're in the world of trading and you're thinking about currency trading and how to better manage your money and make profits and how much you're going to risk, sometimes it's easy to forget that we're talking about the rates of these currencies. Day to day, of course, these interest rates don't change, but they change every so often depending on the country. So when the interest rates change and the currency is worth more, that's going to push up that currency relative to other currencies that are being traded. So the thing that gets a little trickier, and I'm going to talk about in a few minutes, is all the stuff that might be priced in, right? All the things that could be priced into the market. You know, if there's really strong news, for example, in the US, they have a higher chance that they're going to look at raising interest rates in the future. So when we get to that actual announcement of the interest rate increase, a lot of this stuff is already quote unquote priced in, right? Because it's been building and building and building, and it gets priced in. And then we have either the surprise either way or the expected result. So I'm going to talk about that a little bit more in a moment. Banks buy currency and hold in reserves and or increase its supply. So the banks will have currency in reserves, or they'll push it out and distribute. I mean, you know, we've heard about the banks, especially, you know, during Asian session here, buying JGBs, buying different currencies, holding them in the reserves, letting more currency out. There's other ways that the banks can control it. We saw it, when was it? A few years ago. I don't remember the exact year anymore, and that's something. With the euro and the Swiss franc peg at 1.2000. The Swiss National Bank wanted to peg that currency cross and didn't want it to go beneath 1.2000. And whenever it would get right down there, they would just keep weakening the Swiss franc and weakening and weakening and weakening. And then they'd pour billions in and it would rise and then fall back again. And we eventually saw that they couldn't control it anymore. They were just spending way too much and the Euro Swiss just tanked and fell. So how's it going, Packer 02? So we look at the Swiss franc peg as an example. We've seen a lot of other examples over the years. The extreme example of a depreciating currency would be the Zimbabwe dollar, right? That Zimbabwe currency, you've probably seen the $1 trillion banknotes, and they've been, I've heard stories, and I could see how it's sort of true, where people have to have a whole wheelbarrow full of $1 trillion notes just to go get, you know, bread at the market because it's devaluated so much. So next thing here, what are we going to be aware of? So I'm going to boil this down to sort of the rubber meets the road. How can this affect you? How can it make you more money as a currency trader? Number one, we talked just a little bit about interest rate announcements. Those are big news events, and it depends which calendar you use. I'm going to talk about them in a little bit, the different types of calendars and the news feeds and live squawks and that type of thing. But you want to be aware of interest rate announcements, gross domestic product or GDP, employment reports. Employment reports might be unemployment claims, like in the U.S. They call them claimage count in the Great Britain. Employment reports are a really good indicator of the strength or weakness of a country's economy, which can lead to a change in the interest rate overall. Retail sales, housing numbers, commodity price index or CPI, and then a big one, political events or acts of God. We know what happened last November when Trump had that surprise win in the election. You saw, you know, Andrew talked about it for months, the Trump candle on the dollar index. And acts of God, you know, hurricanes, floods, that type of thing. We can also see the markets move dramatically when there's an outbreak of war. Like that good old time I was live streaming and there was missiles being shot, and the yen strengthened and gold and silver rose in real time. So those are the big ones that you really, you know, can't predict per se. Acts of God, even though that's sort of all-encompassing, very overgeneralized statement there, acts of God sometimes you can be prepared for. For example, if there's hurricanes coming, or there's going to be a bunch of, what's an example? Some of the offshore oil rigs are going to get demolished. If there's a war that's broken out, and there's fighting that's going on, and there's weather changing, that kind of stuff. It's you can't predict exactly what's going to happen, but you can be in a safe haven. So you might have remember months ago when we're talking about holding trades over the weekend and how I don't generally recommend it. But I said several times back then, if you're going to have a trade open over the weekend, you want to be on this side of it, because we want to be on the risk side of things. So in other words, the yen pair is falling. If there's war that breaks out, if there's some act of God, some big political event, you want to be on the side that protects you when the markets panic, when they open up on Sunday evening or Monday morning, wherever you are in the world. So how can we keep this all under watch? News events list. So I touched on it briefly, the economic calendar. I like to use Forex Factory. There's a good economic calendar right inside of Forex Signals chat as well. Some people use MyFX Book. There's economic calendars put out by pretty much all the brokers. There's a bunch of free services out there as well. Live news feeds. The one that I used in the beginning. Oh, Kitchy said, how's it going, Big Bear? How does an act of God such as a flood or tornado or earthquake affect the market? Well, a flood, an earthquake, tornado, you know, obviously it's not going to be a huge effect on the world markets. But if there's, like, say, a hurricane or something like that, or there's oil rigs that are damaged, that type of thing, it's basically the same type of movement you would expect when you see outbreaking of some war, uncertainty. My favorite trade when there's uncertainty in the world or with the weather or some kind of environmental uncertainty or political is to be selling the yen pairs, you know, pound yen, euro yen, Aussie yen, dollar yen. The Japanese yen is a flight to safety currency, and it has been as long as I've been trading. That can change. I mean, for those of you who might be watching this video on YouTube in the future, it could be totally different. Another thing you can do is buy gold or silver in your Forex account if you're able to. Most of them are. That's another little flight to safety that you can have. Yeah, suppose if it affects more commodity products such as crops, factories. Exactly. Totally different if you're trading soybean futures or wheat or, you know, pork bellies or something like that. But in the Forex market, you know, generally the currency, they're moved by the price of oil, political unrest, that type of thing. But you know, it all boils down. Sometimes we see the commodities all move in a similar fashion. How many times over the years have you heard the commodity currencies are under pressure, like the Australian dollar, which is based on gold and iron ore, that type of thing, or the Canadian dollar with lumber and crude oil. I think we all know that the price of oil can sometimes be very instrumental in the movement of the Canadian dollar. So live news feeds. Trying to think back to the first one that I had. I can't remember the exact name of it now. It's been a while ago. Financial Juice is the one that I use now. You can select which news feeds you pull from different blogs and websites, Twitter feeds. You know, if you want to select news like CNN or BBC or some of the more popular Forex blogs, you can pull it all into Financial Juice. And they also have a live squawk. Some people have trouble with it running. I haven't had really much trouble with it. It just doesn't run all the time, but they come on around news event time. A lot of traders that I've talked to in the past year or so have really just been turning to Twitter. You know, they'll pick 10 of the most popular news blogs or posts, people who post there. For example, they might post or follow some of the central banks, and they'll get information just as it comes out or shortly thereafter. You know, the whole point about a live squawk or a news feed is that generally somebody can read a result faster than they can type it and send it. But not really the case with some of these groups you can follow on Twitter, because they have some of this stuff already ready, and all they do is click the button when it comes out. For example, if you're following one of the national banks, I think that's probably the best example. We talked about live time squawk. Chat rooms and groups. Any chat room that you're in with Forex traders, like the one right here, can really be a big help, because not only will it help you not miss things, but it will help you get more opinions from people. You know, there's nothing more frustrating as a trader. I mean, this is probably right up there in my top 3 or top 5 things that frustrated me back when I started trading, was maybe a year or 2 into trading. If you don't know my history, I got into Forex trading through managed accounts because I had some friends that were doing really well over and over and over for months and months and months. And I got in, and then the whole thing was falling apart. So I thought I could do better than that on my own. And what was frustrating for me is when you don't have, I mean, there wasn't chat rooms back then that I knew of. There were some forums out there, but I wasn't real active in them. Everything I learned was either through the School of Hard Knocks or through courses that I had on CD-ROM and DVDs and things like that. So back then, I would say, let's trade this, get on this trade on the Aussie dollar, and I would see this news come out really strong for the Australian dollar, and I'd go long and buy the thing, and it would just totally collapse. And I didn't know about how things were priced in. I didn't know how to read several levels deeper, and I'm going to talk about this on the next slide. Let's just go right to it. But being on chat rooms and groups can help, because it makes you understand other people's opinions. Sort of like some of the news releases we see in the US, like when they do the Philly Fed, they look at Philadelphia, they look at different manufacturing groups in different cities, because they're a good representative sample of the country as a whole. And when you see 5 or 10 or 15 traders in a chat room that are saying, what the heck is going on here? That doesn't make sense. Then it lets you understand that, hey, you know, the majority of traders, this is a surprise and they're not sure what it all means, as opposed to you being all by yourself and thinking, am I the only one that's not understanding why this is happening? So that brings me into the next slide. How does fundamental analysis apply to Forex trading? First, note that the news events can be priced in, and that's what I was getting into a little bit. Sometimes it's really frustrating, especially when there's notes or speakers that come out after the news, like FOMC, and there'll be meeting minutes read. As the US dollar gets stronger and stronger and stronger, the odds of increasing the interest rate for the US dollar goes up, and that strengthens the US dollar. Sometimes this stuff is so priced in, and this, I'm saying this in a very simple format because it can get sort of confusing, which is why a lot of people don't follow fundamental, I think, as much as they should. Let's say the US dollar has positive news. We've seen this happen before the last interest rate increase we had, what was it, a couple of months ago with the US dollar. All this data comes in and it builds up the USD to the point where they say, hey, we have remember we talked about this months and months ago already? There's like a 95% chance there's going to be a rate hike, and it's expected. And when it happens, the dollar can collapse for a while. And people say, well, why did this happen? I mean, you've all heard it before, right? I know you've thought it before if you've been trading for a while. Here, the USD, for example, has an interest rate hike. The dollar gets more valuable. The news has been strong. And once the rate comes out, the dollar just falls apart for a few days. And that's because it was priced in. And it was priced in too strong. In other words, the interest rate hike was so expected that when it happened, they were expecting more even. Maybe another 1/4% or 1/8% or more positive news that came out in the minutes that followed that. So that's the thing. That's probably one of the most tricky things as far as news comes out, as far as news trading goes. And I'm not saying trading the news right before and after, getting in and getting out, but just knowing that these things can be priced in. You've seen me, I think, if you've been watching for the last couple of months during some of the Asian session streams, looking at the Australian dollar news and me trying to give you my humble opinion on which way I think it's going to come out based on the history, based on what's happening in the last week or two with the Australian dollar. I think we looked at unemployment claims and I think housing or CPI or something a couple times. And I think it was 5 out of 5 times or 5 out of 6 times I had the direction right, just because when you're plugged into the market a lot, often, you have a feeling of what's going on. Doesn't mean you're going to always be right, but you can see when the numbers come out as expected, is that sort of a letdown to all the hype that's been going on over the week? Or is that a surprise, even though it was expected? So what I'm trying to tell you is, in a nutshell, there's a lot more to the numbers, obviously, than just being the expected number above or coming in above or below. There's a whole gradient. You could imagine a scale of 0 to 10 in that number. If it comes out the same, is it a 10 the same, or is it barely the same? And that's what the traders look at. And that whole herding mentality of people, the psychology we talked about, people tend to follow the others, right? That whole herding mentality. So when the dollar, in this example, the dollar raises the interest rates, the news has been strong. As soon as the interest rate's done, the meeting minutes are done, the dollar starts to weaken, and traders get on board and they think, oh my God, sell, sell, sell. And it starts to happen. Self-fulfilling prophecy. So it's just an interesting thing. And it has a lot to do with understanding the markets and the economies, but also with the psychology of people. We had talked in the past as well about how the markets can sometimes, not always, but sometimes tend to fall faster than they can rise. And you can see that in the stock market. You know, it drifts up, drifts up, drifts up. And then when it falls, everybody panics and sell, sell, sell. And then it rises up. There's that human emotion to seeing a chart moving down. Now with Forex, it's a little different because we have two currencies on opposite sides. It's not like just trading the price of gold or silver or oil, a commodity per se, or a stock. We have that sort of balanced currency on each side. So sometimes it can be the inverse, sort of like the euro dollar versus the dollar Swiss. Patience is the mother of skill. I say this over and over, so I put yes again. Sort of a sarcastic joke there. But it is. Patience is the mother of skill. If you're not sure what to do, and you're not sure what something means, don't do anything. You know, preservation of capital is key. Keep your hand off the mouse button for a little while and just wait. Get in a chat room, get in the forums, talk to other people. Try to see if what you're thinking is correct, or if what you're thinking is really different than what the market is saying is going to happen. So be patient. There's so many opportunities in trading Forex. I mean, I think we can all agree for all the things you can trade in the world, you know, stocks and futures and commodities, I mean, Forex is pretty much up there, if not the leader, in how many opportunities there are. I mean, it's a 24-hour-a-day market, and there's dozens of currency pairs moving all the time. There's always trades to have. If you're not sure, just wait. Patience is key. Cut risk or exit trades before major news due to these. The next few things I'm going to cover are things that we hate as traders. Let's see. Bushels of corn, right? Fundamental analysis. Didn't know we talk about stuff like that here. Nice. Yeah, Harry boy. You got it. We talk about everything. Yeah. We try to cover everything. I mean, all the things that can affect you as a trader. There's some other videos here in the site. If you go through the Forex Signals site, you can find a bunch of different links for older videos or things in the forums and stuff that we worked on in the past that you can find. I know there's good information on the blog there as well. And don't forget to do that. Also, I had a question through, I forget if it was private message or on Skype, but they were asking how to follow somebody so you can get the trade ideas. If you click the person's name on the left of the whole chat room, when you see their picture, you click on their name, and then you click on the little person that has a plus on it. You can follow them, and then you'll be emailed every time they post a trade idea. So enough on that, but here's what we don't like to see as traders before, during, or after major news. Number one, slippage. Poor fills on either side. Slippage means that the price of the currency moves and your broker can't get the fill. Maybe they don't want to get the fill that you want. Maybe their liquidity provider is not that good. Maybe the market move is just so big that there's just no way to do it. But slippage, poor fills on either side. Spreads widening to huge levels. Back in the old days, and I think there's still brokers unfortunately around that do this, but back in the old days, we used to see the spread on something like the Euro Aussie, for example, which can be anywhere from a half a pip, depending if you have a ECN, or, you know, there's all different ways the spreads can be set, but half a pip, 2 pips, 2.5 pips, whatever. Let's just call 2 average for the Euro Aussie. We see it widen from 2 pips all the way to 40, 50, 60 pips during news events, and I'm sure some of you have seen more than that. Let me know in the chat if you guys are watching here, if you've dealt with slippage or huge spreads, and how much you've seen, like what the greatest you've seen has been. Gaps is the next one. Gaps in the market. Look, when you're trading stocks and the market opens and closes, you know, every day, there's going to be all sorts of gaps. Forex generally does not have very big gaps because it only closes twice a week. It opens and closes once a week. Closes on the end of the week. Here in the US, it's Friday, opens Sunday evening. So you'll see gaps at that time quite a bit. Sometimes they'll be big, sometimes they won't. But you'll also see some gaps during big news releases too. So it's just, these are things that are hard to deal with. And if you don't know this, if you have, say, one standard lot on the euro dollar, just the most basic, simple thing, example I could give you. If there's a big news event coming up, number one, I would recommend closing. Number two, the spread isn't that big on the euro dollar. You know, let the news happen. You can get back in after for pretty cheap. Number three, and I know these sort of are random and not in order, just off the top of my head. Number three is, if you're not sure if you should get out before the news and you're second guessing yourself, just get out. Or you can close partial order. You can close out 0.5 or 0.7 lots or 0.9 lots or 0.1. You can close out partial orders with MetaTrader if you have MetaTrader 4 or MetaTrader 5. So you can exit. That would be cutting your risk. Having stops pulled tighter isn't going to do you much good for big news events or gaps over the weekend because of slippage and spreads widening. Slippage is so frustrating because you'll see a wick on one broker that takes out your stop. You open up a couple other brokers or their demo platform, and you'll see it doesn't go there. Then you send them an email, and then you got to go through the rigmarole and see if they'll honor it or not. They usually reply back with saying, "You were trading during a volatile time, and our liquidity provider was unable to reach the price point that we wanted," and, you know, basically you're out. So you want to be real safe and conservative before big news releases, especially the ones that are predictable, that they're on the schedule for weeks and months in advance. I mean, we all know non-farm payroll is the first Friday of the month. So we're going to have it this Friday again, just like every other time. Getting out before is a good idea. And I won't ramble on this too much, but we all know what happens, right? Especially even with when you have things that come out as expected, the pair will whip up 50 pips, whip down 30, 50, 40, 50 pips, wherever it is, and it'll usually regress back to the mean, and it'll take a whole bunch of people out, enter a bunch of triggers for pending orders at bad fills, bad prices. It's just it's not the way to be successful and consistent and profitable long term. You can get lucky trading news. You can make a lot of money just trading news, but it's just so hard to be consistent with that I don't recommend it. Let's see, big spreads, two-part. Aussie building numbers out now. Yeah, we'll have to take a look at those. I have another slide here to show you. Of course. And unpredictability, I already talked about that. You just never know the results at times. You're not going to be able to tell. Like my example that I've done with you and some of the Asian streams, you can get in a groove and get, correct most of the time if you're lucky, but you're not going to know it all the time. So you don't want to bet the house, bet the ranch on a certain trade. You want to keep your risk down low or avoid it altogether. So just a little bit more to cover here. How does fundamental analysis apply to Forex trading? Here's another one. First, note that it can be priced in. I already talked about that the last time. Fundamentals can help with the trader's overall bias on the currency. That's probably the one that I talk about the most when I do my streams and when I do my own trading, is getting the bias. So without putting too much time into this, I want to tell you just a little nugget or two on there. Yeah, Australian building approvals month over month are coming out right now. Probably out already by the time you watch my delay here. Set for 8:30. A lot better than expected. 10.9%. Previous was minus 5.6. It was expected at 1.2. Came out at 10.9. That's really good. That's the highest they had since last August, I believe. So good numbers for the Australian dollar at the moment. But this will just verify that this is all live in real time with you. Fundamentals can help traders with their overall bias. So I talk about it all the time. When I talk about my top-down analysis, whether I'm looking at, let's say, the Aussie dollar, for example, here, we look at the monthly, the weekly, the daily, the 4-hour, the 1-hour, and we go down, top-down analysis. We look at the news that's coming out. We look at the news that has been high-impact news for the last week or two, and the overall bias and sort of vibe, that sort of organic vibe that the market puts off. What's the general feel when I look at Financial Juice and my Twitter feeds? Is there, all this posts about, and you'll see the same ones over and over again, of course, but is there all these posts about how the Aussie is surprising us, and the last couple of days, the Australian dollar has been the surprise strong currency, and you look at your momentum meter and you find that it's the strongest currency for the last few days. You find out that the news has been good, and then you find your bias, and you say, hey, I'm not talking about a long-term, hold here, but in the next 12 hours, 24 hours, 36, 48 hours, whatever it might be, I'm feeling that the Aussie is pretty strong. And then you try to find a currency that's weak. Maybe it's the euro for the euro-Aussie cross, my favorite pair, as you know. Maybe it's the Aussie yen. Maybe it's the Aussie CAD. And you try to find the weak currency. And when you find that bias with the strong currency and the weak, then you pull up your charts, you do your top-down analysis, and you decide your direction, and then you try to find the ideal entry. And that becomes the technical part of the trading, of course. So fundamental analysis, I think that most traders will say that they're technical with their trading, but you have to at least look at the basics of fundamental. I'm not saying you need to know all the news. And I know when Andrew and I used to do the Friday morning when we were both on together, he would talk about the Great British Pound, because of course he lives there. And he can tell us so much about the elections and the hung parliament and Brexit. And it's really nice to learn that information, because it can really give you your bias on the Great British Pound and what to expect and how not to be caught surprised and how not to be caught off guard when you're trading. Next, we have multiple news events at the same bias direction can provide high volatility. So I think I wrote that right, maybe not. But what I'm, as an example here, non-farm payroll this Friday, we have 1, 2, 3, 4, 5, 6 high impact news releases, all coming out at 7:30 a.m. Central Time. We have 3 out of Canada, the employment change, the trade balance, the unemployment rate. Then we have average hourly earnings from the U.S., non-farm, unemployment rate, and then of course we have the moderate news of the trade balance. So we have 6 high impact news releases and 1 moderate, all coming out between the dollar and the Canadian dollar, US dollar and Canadian dollar. So high volatility is going to be expected in a cross like the dollar CAD. Probably one of the most dramatic ways to get volatility out of the dollar CAD is on non-farm Friday, because we have all the news for the USD and we got huge news for the Canadian dollar all at the same time. So multiple news events can provide high volatility, which is what you want to be wary of if you're trading small gains per trade over time. Remember, it's all about that small edge. Maybe you're trading 0.25%, 0.5%, 1%, 2%, whatever it is, but you want to make these little bits of profit over time. And trying to pick a side on that when you have slippage and gaps with high impact news, it's just not the way to be consistent. It's the way to be lucky sometimes, but it's the way to be unlucky just as much, if not more. I always talk about trading, not always, but I often talk about it sort of like a minefield, like that old game Frogger where you got to jump from thing to thing to thing, because there's just so many traps. There's so many ways to lose, that the way to win is all about repeating the little edge that you have. And when you trade, this is sort of going off on a little bit of a tangent, but I know we've all seen it. You can have the direction after non-farm payroll, for example, totally right. The night before you can say, here's what's going to happen. This number is going to be crap. The dollar is going to tank, and you can be totally right. But when you trade, now you have to worry about getting in after and getting whipped down in a retracement, getting in before and having it whip up just before the news comes and take out a stop. You have to worry about slippage and gaps and poor fills with liquidity. It's just so many ways to fail when you trade these high impact news releases. And these high impact news releases, like I said, the big ones are all planned far, far in advance. So you don't have to be caught off guard with those. The best thing you can do if you're learning how to trade is just avoid them, get out of the trades. I made it pretty clear I don't have a problem staying in pairs that have no relation or little relation. For example, Euro Pound, I'll stay in through non-farm payroll here in the US. Something like the Euro Aussie, those types of things. They're going to move, but it's not as risky as just going straight up on the currency. More about fundamentals is going to be covered in lessons in the weeks ahead. We got a lot of great things planned for everyone. Let's see. Big Bear, hey, I watched that video already today. That's a guy that, what's his name? Yeah, I watched this already today. Yeah. It just to prove to you that I watched it, because I just saw the link right now. He has a demo account. I think he's on the 1 minute time frame, and then he has the live account, and it whipped up and whipped down and took out $5,000. I think he had 2 10-lot orders on, I believe, during that. Yeah, that was a crap broker for sure. Hopefully he'll get his money back. Weaker yen, Yo-Yo saying, could be. How can you calculate your edge? PVM Forex. Nice to see you. I haven't talked with you before here in the chat. PVM Forex. How can you calculate your edge? I don't know if you can calculate your edge overall. That's just such a big statement. The best way that you can calculate your edge is to look at your past performance over as many months and years as you have for each currency pair. And you can do that with something like MyFXBook, which is a free service. You link it up to your account, and you can break down all the performance that you've had over the weeks, the months, the years, and you can see your holding time for each one, and you can look at a summary. I showed one in one of the other videos, I think with class just the other day. I had showed him one before. I used to manage funds way back years ago before all the laws changed. And I had a MyFXBook account that had 700, 800, 900 trades on it. And it'll show you your percentage win for each one. So you can try to calculate your edge on a different pair. When I talk about how to bring your trading together, I don't know if I did it in the last stream or if I have it coming up in the next one, but it's about wrapping up your whole trade plan. You look at the top-down analysis, you look at the news, you look at your risk, and you try to get that slight edge. So to calculate it is pretty tough. But for most traders that I know, and I'm not talking about win rates, I'm not talking about if they win half the trades or 80% of the trades, whatever it might be. I'm talking about your edge. For most traders that are successful, the edge that you have is anywhere from 1 to maybe 10%. And I'm talking net. When you add in money management, when you add it in win to loss, when you add in your risk to reward ratio, your currency pairs, like for me, the dollar CAD is always my nemesis. I average that in with my better trades, which is usually in the Euro Aussie, for example, and you get your net sort of edge that you get. And over the last few years, my net has been profitable most months. So my trade ideas this month, if you've been following them, haven't been the best. And I was just talking to, I think I was talking to Andrew. Was it Andrew earlier? I forget. It was just earlier today. But I was telling him how, for every 3 or 4 trades I have, I try to pick the best one for the idea, and that tends to be the one that's not going the way. But it all comes out, over months and months and months, you take that edge, and to actually quantify it, I think is sort of hard. There's just too many factors in there. But you want to figure out, when are you the best? Are you the best during Asian session? Are you the best when you wake up in the morning? Are you the best on, if you avoid Sunday trading and Friday trading and just stick to midweek? Is the euro dollar the only thing you ever really feel good about? That kind of thing. And I think that it's more of a qualitative answer to calculate your edge than it is a quantitative to put a number on it, because there's just so many things involved in trying to calculate your edge. Can you speak to a 10 lot order on 5K? Yeah, right, Big Bear. He was going big on that. Now, I only watched part of that video earlier today. What's his name? Alex Deploy, or Deploy, I think. One of my friends that I started out trading with used to do live trading videos for him. And he sells a bunch of things like the double in a day Forex plan and all that stuff. But it's funny how small of a world the Forex market is for people who've been around a long time. But he had a 10 lot order on, I believe, long, and a 10 lot order short. So I think he was using some expert advisor. So he had 20 lots going with $5,000 account, but it was hedged. So I don't know what his plan is. It's still huge in my mind. PVM, I was wondering the difference in measurement between edge, profit factor, and expectancy. I don't know if you can calculate that accurately with Forex trading. It's so much different than a clean cut report like the stocks would give. The only tip I can give you is just to put the data into a third-party app. I think FX Blue is one, My FX Book, and there's a few other good ones that allow you to track things. Of course, any of the signal, if you're a signal provider at any of the websites, you get a real good history there as well through them. Also in the trading contest, you can see volatility in that. And I'm bringing that trading contest up. I think they're changing it for this month. I know there was a bunch of stuff going on with some of the traders. I think they're going to be changing it this month as well, the parameters for the trading contest. CAD is a nemesis every time. Yeah. The CAD, I love and hate the CAD at the same time. I mean, it's just something that's been mixed for me. I get in a good groove and I get my confidence up and it slaps me in the face, where with other currencies, I feel like I'm a little bit more in control. But I still trade dollar CAD and euro CAD a fair amount. I would say it's 10% of my trading. Big Bear, what do you aim for in terms of percent gain a month, or what kind of drawdown do you personally stomach? For me, that's sort of a tough question. That's one of the reasons I don't have a MyFX book account linked right now, is I have seven or eight. Well, the 8th one isn't that big, but 7 or 8 live accounts. And since this is a live video that's shared on YouTube, I'm not going to get into my personal finances here, because who knows who's watching. Tax person might be watching it or something. But I have accounts across 3 different brokerages right now. I had 2, but now I have 3 different brokerages that I use. And one of them is used for the live streams. One of them is used for used as my big account that I'm trying to build up so I can retire. The other one is used for scalping and testing different methods. The other one is used just following a couple people's signals that I like and trust over the years. So to put it all together, I might leave my big account with a euro yen trade on for a week, but I have 10 trades that I put as trade ideas for the week or 2 weeks, and then I might have some scalping ones I do in another account. So overall, I always, and I've told everyone this, very transparent and open, honest, when I put on a trade, say in one of the accounts, say when I'm doing my live stream, the risk that I have in that account is over all of my accounts. So I'll give you an example that is not my own funds, just a generic example. Say you have 3 accounts, $10,000 each, and you're only trading in one right now. Maybe it's a swing trade or something. I will assume in my mind that I have $30,000 in equity, and I'll place that trade based on $30,000 in equity, whether I'm risking 0.5% or 0.75% or 1% on that trade account. So when you look at the $10,000 account, it might be risking 1.5% to 2% of that whole account, but it's 0.5% or 0.75% of my whole available balance. So it's tricky. I mean, and I'm not trying to confuse you. I think some of you are saying, well, that's not confusing, but some of you might be thinking, well, how the hell do they do that? But it's just over the years, I keep a really good detailed trade journal on my desk here all the time. I always have my post-it notes and my, trade reports and my ideas and biases written down. So as far as overall gain per month, I love to get 5%. If I can get 7% in a month, I'm really happy. I'm also not frustrated in any way with 2 or 3% because I've had months over the years where I was down huge per month. So, as far as emotion goes, people say you can't take your emotion out of it. I have other ways of generating income besides trading. So I'm not, putting my food on the table just this month's income. So I don't get too emotionally attached to it. I was more emotionally attached in the beginning. But if I break even for the month or 2%, 3%, I'm happy. My goal is 5. I've had much higher. I mean, I have videos on YouTube years ago where I turned $500 into $15,000, $20,000 in 3 weeks. Got it all documented there. I mean, depends what you're after, I think the other question you should have is, are you comfortable enough in your trading to be able to withdraw a set amount of money? Maybe you need $1,000 a month. Maybe you have to have $1,000 a month to make it worthwhile to be a member here at Forex Signals, to be able to trade and be able to put in the time. Maybe $1,000 is what it takes to make it worthwhile for you. For other people, maybe it's $100 a month. And then you break that down to percent. What percentage is that? I mean, the vast majority of people that I know who trade or are learning to trade don't have enough money on their account to play the percentage game that the professionals should use, or that they use. So if you're aiming for 2% a month, 3% a month, and you can do that consistently, you're going to be rich in no time. But if you only have $500, it's going to take you a lot of time and work to build that account up. So in a perfect world, I think 5% is a really good goal for a Forex trader. 3% is good. Sometimes you'll get 7, and I'm talking about an account that's large enough to make a difference in your life. Even if you're not pulling out any profits, if you're just trying to build it. So, drawdown, it's all relative, I suppose. For me, if I'm down 5%, I have to look at things. I haven't been down 5% for a while. When I started out trading, I was blowing out accounts left and right, but I was putting, $300 and $500 in testing things. And, if I had $10,000 to trade, I was putting in 500, losing it, 500, losing it, 500, losing it. And then I turned 500 into 3,000, take out 2,000, trade the 1,000 left. So as far as percentages go, that was all sort of irrelevant back then for me. But now, if you're down 10%, 15%, I think that if you have a big enough account and you're trading to try to, change your life and build up a retirement, whatever it might be, maybe pull some income. When you get down 10, 15%, especially 20%, even more important, 20%, then you need to turn down the lot size. You need to look at what you're doing, try changing some things. if you're risking a 0.5% or 1% per trade even, I mean, to be down 15%, I mean, either you have to have 15 losses in a row, or you have to lose such a big chunk, such a majority of your trades, or have profits that are so much smaller than your losses that there's got to be some other problems there. So it's all relative. I mean, some of the things that I'm talking about here, it might sound like I'm rambling on, but I'm just trying to sort of share my thoughts with you, unscripted. But I'm sort of just trying to talk to you like if we were talking in a pub having a beer together. And it's really just, it's an individual thing. I mean, there's such a wide gamut of people who are watching this video. Some people, they have $500 and that's it. Other people, you know, they might have $500,000, $1 million in their account and they're just trying to pull out $5,000 a month to live, you know, whatever. It depends. So percentage for you, whatever you're comfortable with. But when you talk about, you know, trading full time and professionally, I think those numbers that I gave you are pretty accurate, at least for, you know, the people that I've learned from over the years. Yo-Yo says, Jason, I find that regarding news being priced in, sometimes you can see potential forward news results before they happen by stating the market's price action day before. That's exactly right, Yo-Yo. And that's what I do on those Aussie ones. I think you've been around when I do those Aussie ones. I've picked out most all of them, and it's looking for the strength of the currency. It's an art, you know. That's the only way I can say it. The longer you put in the chart time, you know, I have tens of thousands of hours, probably more, of chart time in. And when you're not trading, or you're in a trade during quiet times, what do? You look at the news, you look at the chat rooms, you watch videos. I mean, you're sitting here, might as well do something, right? So when you get all that time in, you get a feel for it, you get a vibe for it. Not saying that you're going to be a billionaire if you put in a lot of time, because you got to do things the right way. Right. Kitchi said it blew a lot of accounts. My biggest account, though, was only 1,000. Now it blew. Not now. You're all good. Yeah, I agree. I've blown a lot of accounts back in the day. I don't even know how many. 25, 30, 35 accounts. But they're all smaller, you know. So, you know, back then, I took a lot more risk. You know, like I said, if I had 10 grand to trade, I'd blow out 10 accounts of $500 each. And then I'd finally get lucky and I make $5,000 back and take some profit. So, you know, it's all relative. You know, usually when someone says they blew an account, that's like, oh my gosh, it's the worst thing you can have happen to a Forex trader. You know, it's like your star quarterback in a football team breaks his throwing arm. It's the worst thing ever, right? But what if the person has 100 grand for trading and he had $5,000 account that he blew? That's a lesson. That's 5% loss of his trading capital. So it's just relative. So I think that, you know, bringing up that topic of percent risk and drawdown, I'm not intending to give you a runaround answer. I'm just trying to tell you that it just depends on so many other things. But that's my best feel of it. You got it, Big Bear. 47K account. Nice. 2 to 3K a month. That's good. Yeah, Kitchi. I mean, you don't have to tell us all this in public here, but I'm just curious if you're doing 2 to 3K account, if you're adding some back in and building the account and taking out some profits, or if you're just letting it build, or you're pulling all the profits. That's really good. Big Bear, Jason, are you short euro dollar? I was short euro dollar, euro yen, and euro pound earlier today, and I took one win, and I had 6 orders. So I had 2 orders on each, and I took 2 of those that were winners and one that was a loser on the euro pound. I purposely don't even have my trading platform open right now because I don't want to get distracted with this lesson. But I had 3 trades earlier today: euro dollar, euro yen, and euro pound, all short. And it was around US Open time when the euro was really under pressure. And it whipped down, I think it was 40 or 50 pips this morning, and then it retraced it back up. So I did okay on that, actually. 2 of those trades, I had 6 orders broken up across those 3. 2 of those pairs I won, 1 I didn't, and made some profits today. So it was a decent little morning. I didn't trade anything since then except for short in crude oil. Estimated all up, I've lost around 10K or so in my learning process. I'm open. Yeah, I take some out if I need it. Yeah, it's nice. It's nice to be able to have that, isn't it? Have that option. Yeah, 10K, that's not bad. I'll tell you what, Kitchy, that's not bad at all. I will unfortunately say that I have you beat in how much I've lost since I started trading. Even back, I don't even know what year that was when I first got in that managed account. Back then, I put in 25 grand and in a managed account, and in the first 6 weeks, I think, maybe 6 or 8 weeks, it was down to 12,000, I think. That was way back. If you look back on your charts, way back to, man, I don't even remember when that was. 2004 or 6 or something. I don't remember when it was. It's when the dollar yen was going up and up and up and up and up, and it finally topped out. And this managed account was still buying the dollar yen. So I took my, I think it was 12 grand or so, maybe 13 grand that I had left, and started trading that and blew that whole thing out. But since then, I'm definitely in nice profit since I started. Yeah, most of them are $500 accounts. That's about what I did too. I mean, that's what a lot of people do. $500, you know, not good to lose. It hurts a little bit when you lose it, but it's not like, for most people, at least here, it's not life-changing. Why don't you manage accounts now? I don't manage accounts now because I'm not licensed, and there's so many license and regulations here in the U.S. that I don't manage accounts. I used to. I used to manage accounts through Interbank FX out of Utah, if you ever heard of them, years ago, before the Dodd-Frank Act was passed and you had to be licensed to manage money. Also managed funds through Hot Forex for a while. It wasn't big. I mean, it was a good amount of money, but it wasn't millions and millions of dollars. And I did good with that. And there's just a lot of details here I don't want to get into on this live video because we had to move accounts around and get licensed in different countries, and it was just, I paid a bunch of money to have different accounts set up all around, and it just wasn't, it didn't feel good with me, to be honest. It just didn't feel good to me. So the only way I would do it now is if it was all licensed, regulated, open, honest. I haven't traded anybody's money for years and years now, except for my own. Cool. All right, guys, that's a little, guys and gals, little touch on fundamental analysis for you all. Been going about 55 minutes here. Fundamental analysis, big topic. We'll be talking more about it the weeks ahead. But I'll be on live streaming on Thursday doing the Asian review. And I'll be doing some more live streams later in August as well. I believe Andrew's going to be gone for a couple of weeks, so I'm going to take over and do some extra streams there as well. So if you need anything, feel free to email me, jason@forexsignals.com. And I have a trade idea or two I'm going to be posting tonight as well. Hopefully they'll work out good. Make it a great rest of the day, and happy trading. Take care.